Hello, and welcome to another episode of the Truth About Real Estate Investing show. How is your summer going? Are you making the most out of it? As Jesse Itzler, our keynote speaker for the Wealth Hacker Conference, says, summer hard. Because no one includes September as part of summer. Technically it is, but people go back to work and school in September, so it's not for many part of their summer. So anyways, there's really only 8-9 weeks of summer to enjoy and create those memories, especially after those last 2 years of lockdowns. When was the last time you saw your mom? For me, it was 2019, as the lockdowns in China and Hong Kong are tough, but finally she made her way back from Hong Kong to stay with us with no return date. I haven't seen my mom in over 3 years, and my parents aren't getting any younger, so we'll be looking forward to enjoying the next couple months with my mom. Again, making memories. So yeah, summer hard out there. This week, our kids were at the cottage. Sorry, not at a cottage. They were at an overnight, week-long overnight camp, while Cherry and I are at a cottage, at a friend's cottage. So we had a blast. We had a whole week without the kids, which was weird. We did miss them, of course. But we took the opportunity to catch up on sleep. We were working less, but still working while on vacation. Such is the life of an entrepreneur. And some of it's fun. I got to meet up with a bunch of Belleville investors, including HGTV's own Stephen Phillips for a round of golf and a tour of Belleville for investment properties, duplexing and other development opportunities. Why Belleville? Because much of who I consider smart money in the Durham region are making the trip out to Belleville to invest. Hence, we are doing some R&D, rip off and duplicate, not research and development. For example, clients of ours picked up a large bungalow on a good sized lot for $400,000. Those are prices that we paid in Hamilton back in like 2015, 2016. Hence, opportunities for cash flow are greater. Yeah, rents, even though the prices are what we used to see like 5, 6, 7 years ago, the rents are quite high. So again, it's a great mix of more affordability and greater cash flow potential. My whole investor team of coaches, we all made the trip out. James, Tammy, Jamil, Chris, and Tim, and of course Stephen HGTV Phillips hosted us. Stephen is of course local to Belleville, so he hosted us in fine style. We had a country-style private dinner made with local ingredients, and we drank local wine, and nothing beat the company. I know I had a blast, and after seeing the opportunities in Belleville, there's nothing more than enjoying life than like great company and around, especially with like-minded investors who are action takers and wanting more out of life, who are driven, and also of course investment opportunities. So we'll run another tour soon. So if you're east of the Greater Toronto area, you need to put this town on your list. Come check it out. If you're likely it's new to you. The towns are only 50,000 people, so unlikely any of you listeners do live in Belleville. So if you're new to town, you definitely want to get in touch with someone who knows the area and knows contractors and knows property managers and knows what the opportunities are. You definitely want to reach out to our team, especially since we have Stephen Phillips on the team. He's been featured in or made appearances, I think that's the term, whatever. He's been on HGTV like 24, 26 times. Anyways, in this current environment, this is the best I've seen in the market in terms of opportunity to buy and cash flow since the crash of 2017. And for those who remember, studied history, in 2017, in the summer of 2017, that was probably near the bottom. And since then, prices doubled almost 5 years later. What the next 5 years have in store for us, I have no idea. Nobody knows. But all the smart money I know and I follow are bullish long term, and of course cautious in the immediate term. Speaking of smart money, we have one of our lawyers, Hussein Kudrati, on the show, who is an active entrepreneur, real estate investor, stock investor, who comes from several successful generations of entrepreneurs, real estate, and stock investors. Hussein is a trusted advisor to Cherry and I, since he understands the problems faced by families like our own who have assets and businesses and kids they care about, preparing futures for. Hence, he helped us prepare our wills, whatever. He's helped us with our family future estate planning, whatnot. and he's handled most of our recent real estate transactions, including the refinancing of now 5 properties. We refinanced 3, and then we just refinanced 2 more. That is right. We are freeing up capital, improving our cash flow positions, ready to take advantage of these dips in the market, both stock and real estate. And crypto. Hussein knows a good investment when he sees one, hence he was one of the first to sponsor Cherry and I's Wealth Hacker Conference. If you too are interested in sponsoring, please reach out to us by responding to any of the emails you receive from us, or just reach out to me over social media. Hussein and I discussed several topics, including what investments he likes and absolutely refuses to assist clients with. Yeah, those investments are just that bad. He won't accept your money to help you with them. How someone as successful as himself wants to raise humble children, investing in physical gold, and of course we talk about real estate investing and stock investing. As always, it's fascinating to pick Hussein's brain, so please enjoy the show.
Hey everyone, sorry to interrupt the video, but I wanted to especially invite you to the biggest event of the year for entrepreneurs, investors, and anyone who's crazy about building wealth and living their best life at the Wealth Hacker Conference. The Wealth Hacker Conference is an all-day in-person event, live only, happening in Toronto this year, November 12th. We'll be learning all the best practices on building wealth from retiring early, including from top experts like 6-time best-selling author Derek Foster. He retired at 34. He's known as Canada's youngest retiree. We have the incredible Jesse Itzler, New York Times best-selling author of one of my favorite books, Living with a Seal. He's our keynote speaker, and he'll share his secrets on building a life resume to be proud of, plus all the hundreds of millions of dollars he's made. Plus tons and tons of other excellent speakers who have built financially free lives through real estate, stocks, crypto, and business. You do not want to miss this event. The links for the tickets are below. Hope to see you there.
Hi, Hussein.
Hey, everyone. How are you?
I'm excellent. What's keeping you busy these days?
Not enough golf, that's for sure.
Not enough. We were just out this week.
Yep.
What's enough? What is enough?
I'd like to be playing twice a week.
Twice a week.
But in all seriousness, work's keeping me pretty busy, and I welcomed a new addition to my family a few months ago. So that's also keeping me busy. Being a father of 2 now is its own unique challenge that I'm really enjoying at this time.
You seem surprisingly awake for having a newborn at home.
I have a wonderfully supportive wife and very caring parents.
How are your parents doing?
They're loving the grandparent life.
Yeah.
You know, they say nothing better, right?
Can I ask how long they've been retired for? Are they technically, would you consider them retired?
Yeah, I would say they've been retired. I'd say that they've been fully retired for the last 5 years, I would say.
Okay.
I mean, they still have their interests and their ventures that they do from time to time.
Right.
But it's now more passive, you would say, and
right.
more philanthropical, if you will.
Right.
But fundamentally, their focus and their time commitment is largely dedicated to being grandparents now.
That's pretty cool.
Yeah, I mean, there's nothing. I mean, as you know, especially from our cultures, the influence of a parent on the next generation, it's the grandparent to the grandchild is the best way to inculcate them with the values, the traditions, the morals, the ethics that you want them to have.
Right.
And for me, I'm very fortunate that my parents have graciously agreed to assist with those objectives. It also allows me to have free time to pursue still things I enjoy. Well, not that I completely abdicate my responsibilities, but I really enjoy the ability to focus on building my law practice, networking, and building my connections within this community. Because in truth, I've only been in this community for the last 6 years, which is not the longest time. And especially when you had 0 connections coming to this community, it's always a work in progress this early to keep building your network and your connections. And not just from a professional perspective, but just from a personal, because it does take a village to live life even. And I want to build those relationships. I want to have those networks. And I want to create a stability and a foundation that if my children want to stay in this area, they don't have to start from scratch, and they have the advantages of, parents who are established in the community.
That's funny because you could choose any community, yet you choose this bunch of crazies.
Honestly, I truly love it here. I think the quality of life that's offered here, as long as you make smart choices, and you still have to work hard, it's not handed to you, but the quality of life here to practice whatever career you want, whatever religion you want, whatever lifestyle you want. I think it's something that as Canadians, I think our generation and the generation coming up takes it a little bit for granted. Like the quality of life we can have, the freedoms we enjoy are not appreciated. And I want to make sure that at least I do my part to instill that. And like, for example, not to get political, but the recent election, right? I wasn't thrilled with the choices available.
Provincial or federal?
The provincial election that just came.
Yeah.
I wasn't thrilled with the choices available.
I don't think anyone was, based on the voter turnout.
But I appreciate the opportunity to still have a say. And so I insisted on taking my daughter with me. She's still below 5, unvaccinated right now. But I still wanted to take her with me to, you know, to experience that, to know that it's an important step to take, you know, and it's a privilege to be able to exercise your vote.
Did you explain to your daughter who you voted for and why?
No, because my job is to teach her the importance of voting, not to influence her political ideologies. That is something I want her to form for herself.
I know, but even to educate, you need to say something. Like, these are the 3 main parties. This is part of their platform.
That will come with time. And eventually I would hope that she would take the time to be informed, actually read the platforms, not just go with what the talking heads are saying. And actually make an informed decision and vote for your interests. Because we see this happen in the US and almost everywhere now, where people have the privilege to vote. They go with the talking heads. They don't actually vote with, how does this make my family's life better? Which policies advance us? No one thinks like that. It's too much black and white. And the reality is platforms are gray. And you have to identify.
Yeah, and it could be largely lies too. But
I mean, sure. I mean, politicians say one thing, do another. We all know that to be true. But at least when you're voting, at least vote with something. Otherwise, what's the point?
Yeah. I'll cheat. I usually ask other people what they're voting, and that's how I gotta pick. It's the Tim Ferriss model, right?
Yeah.
You ask someone who's smart and well read on the subject if you have similar values to them, like.
For sure.
Right, that's what. Yeah. I had the toughest time trying to at least try to give like the Coles notes to my kids, because my kid, we rode our bikes to go vote. Cherry and I insist on voting because that ensures our right to complain about what happens. Because my thing is, if you don't vote, you don't get the right to complain. So I rode my bikes with the kids and just trying to give them the Coles notes, because they have no idea what's going on, who the NDP is, what they stand for, or whatever. Anyways, yeah. So that was funny. Anyways, sorry, I want to go back to your parents for just another moment, just because we don't have much opportunity to have people on this show who are on the other side of hustle, right? So your parents worked hard.
Yeah, my parents, my grandparents, my great grandparents, like they worked hard, and they all sacrificed to some degree for their quality of life because they wanted to set up future generations. And this is when I talk about imparting values. It's that you could focus on having everything for today, or you could focus on, this much is good enough because I want to leave a legacy for tomorrow. And that's a choice that everyone has to make, where that boundary lies. But I know that, like, I was fortunate to be privileged enough that my forefathers and foremothers were disciplined enough and motivated enough that they maybe did not enjoy all that they could enjoy, but they took enjoyment in the thought that my future generations will have more options. And I think that's what we all want for our kids, is that they should have more options, and that they should be able to pursue with hard work what they enjoy versus doing something simply for the necessity that this provides me a paycheck to put something on the table. And I think that's the motivation, right? It's about, and I find that, you know, today is when people say, like, what's your advice? And I'm like, work for your passion, right? Because often I find if you work for your passion, not everyone, but you will be able to get to a point where the money will flow as long as the idea is solid. and your passion is solid, because hard work is almost always rewarded, I find, especially in this country too. I still maintain that if you work hard and you are committed, disciplined, educate yourself, which is all part of hard work, you will get somewhere, and the financial rewards will come. But also plan for tomorrow. Save, right? Like Canadians right now have record savings simply because property prices are still at ridiculous highs. But my question is where would your savings be if you took out your real estate value from there? And you have to have a hedge. Like we've seen the softening in the real estate market to some degree in some areas. And people are understandably stressed. And it shouldn't be that so much of your wealth is tied up to real estate, because while it's a great tool for wealth generation and everything else, liquidity is also important. How are you taking advantage of opportunities? How are you also going to be positioned in the event that life throws you some curveballs, whatever they may be? You have to have some liquidity, and you don't want to have to sell properties. Like imagine if you had bought a property in 2019. You've done really well, you're still up. But it's going to sting, and I find it hard to believe anyone who tells me otherwise, that if you didn't sell in February and you had to sell in April or May, you know that you've left money on the table from the peak, right? So you never want to be in a position to be forced to sell. It should be that it's a choice. You want to be the master of your own destiny.
Yeah, I would say that this correction that we're having came faster and harder than I expected.
I think than a lot of people expected, right? Because, I mean, and it's also surprising to me to some degree, because the rate increases were telegraphed. People have been talking about it coming. But for some reason, it still caught people off guard.
Right. Well, I'll also add to that the run-up caught me off guard to how hard and fast the run-up was as well, for like December, for January, February.
Mm-hmm. Yeah, I mean, that was crazy.
Because all the economists were saying, you know, the trigger point for this market to go down will be the first interest rate increase. Mm-hmm. Right. So my team's followed it, and we've known.
Yeah. It's interesting. Like, I mean, you know, who would have seen the real estate market do as well as it did during COVID too, right? People would have thought people would have been hesitant, the uncertainty around it, but it didn't stop anything. Mm-hmm. You know, it ran on steroids.
I wonder if people were just bored.
It could be anything, right?
I have all this time for a side hustle now. Let's go buy some income property.
Exactly. And I think investors are a big reason that the property prices got driven up so much. Yeah. Because I don't think it's first-time home buyers who are buying it. In fact, they're the ones kind of suffering, right?
Big time.
For this market.
I feel so bad for them.
Yeah,
so much political rhetoric and was around supporting and making making programs available for the first-time home buyers benefit. You know,
Mm-hmm.
like waiving the land transfer tax in Toronto, being able to use your RSPs and stuff like that to borrow for your first home, and they're the ones getting whacked in this. Because we were discussing on the golf course, like what your experience is. So, for example, we had a guest on just a few weeks ago who does mostly regular real estate with regular agents, regular real estate people buying and selling homes, and in his experience, there's lots of trouble closing. Appraisals are coming in low, so then home buyers who bought near the peak, around the peak, they don't have enough down payment to cover. So closings are being pushed. Some people are walking away, trying to buy. Some buyers are walking away. Our experience here working with our clients is extremely different. Like we talk every time we're together, we're talking economics and what we're seeing in the market and our caution, right? Like for example, in this market, like our investment criteria is so different. As in, we want multiple exit strategies and multiple ways to improve a property. So for example, in this market, I want to be able to basement suite and ideally garden suite as well. Right. Unfortunately, we're picking up the pieces for another investor who is working with someone else who doesn't have a good read on the market. A realtor that doesn't have a good read on the market. They bought a property in April, May that had no exits, just a vanilla single family home, can't suite the basement, can't garden suite, and they overpaid for it. anyways, my point is, what are you seeing in the market in terms of like closings, appraisals, and then also I had to ask. Start with that.
Well, I mean, we have a couple of clients who are selling, who have already bought and now are selling after the fact. They bridged, and their buyers are potentially going to walk away, or have at least indicated that they may have trouble closing. One of them sent a letter asking for a $60,000 price reduction, and I mean, our client basically told them,
Wow.
I can't say this implied company their response, but that was their response. And I have another one that basically is they're trying there to get an extension to the deal because they have to bring in foreign money from their parents abroad to help bridge the appraisal gap.
Are these investors or these regular home buyers?
My understanding is these are actually like buying principal residences.
Okay, so regular home buyers, right?
Who are just, caught with their pants down a little bit, right? Because in both cases, their appraisals came substantially lower than what they had bought the properties for. So they're panicking, understandably so. And my clients, the knock-on effect is there as well, right? Like I've already had to connect my clients in preparation with litigators because you also have to move fast because you have an obligation of mitigating your damages and so on and so forth. So you got to make sure that you're set up to have that success so that, when this goes before a judge, as it may, you have done everything right. I want to basically create the perfect platform for them to recoup and mitigate whatever stress that they have in their lives. So that's the one side. But for the most part, I would say that my clients have been okay, and that in fact, I see a number of them taking this opportunity to identify deals and are actually quite aggressively purchasing, some of whom are mutual friends, who have done very well for themselves during this market. So it's all about identifying where the opportunity lies,
right,
and the conviction of your business model. And most of our clients, as are yours, are investor oriented, and they're okay because they just have had to adjust their numbers, make sure that deals make sense, and as long as they're doing that, they're going to be okay. Because you have to remember this, right? One, based on the immigration numbers coming into Canada,
we just set a record for this quarter for the highest immigration ever.
And new units coming online are just, the correlation is just not there. There's far more people coming in to put pressure on the market. Investors who have been in the game for a few years now have done exceptionally well. They've got a lot of equity, so they've got a lot of firepower. Even with rising interest rates, they have a lot of firepower. And those who know how to use JVs effectively, again, there's a lot of people who've learned how to use these tools in manners that can move them along. So I don't see prices falling because I think the pressures are there. Now, certain areas, maybe because they're just not desirable. But I think core fundamental locations, as long as the location is good, I think the opportunity is there. Again, do your own analysis, do your own risk tolerance, run your own numbers. I'm in no position advising someone. I'm not saying go buy right now anything. I'm not saying go sell anything. I'm saying analyze your situation and I always tell people, be nimble. You can't be static and flat-footed in investing in any area, whether it's real estate, stocks, whatever you're investing in, business. You have to be nimble. You have to adjust, right? Like if you own a canning line, for example, even that, you got to be able to know, how is the tech changing? How can I get more efficient, right? Because if you're having to pay higher salaries as wages across the board have been going up, you got to recoup that somewhere else. Because fundamentally, nobody wants to be hurting their margins, and you don't want to be passing, because when you pass on cost to your customer, there's always that risk that they might go and start looking for somewhere cheaper. Yes, you hope that your quality of service, your history of relationship matters, but if someone's willing to do something for cheaper, money often talks.
And to one of your earlier points about being nimble, our mutual friends of ours are doing the same thing we're talking about, is being a bit more picky in terms of what they're buying. So for example, I was talking about how I want multiple options to add value to my property. We have mutual friends who are doing sever and build, right? So they're buying a double wide lot, they're severing it down the middle basically to create now 2 lots, and then building on the now empty lot, right? And that deal was not available 6 months ago. No,
right? Because they're going for, the numbers would make sense, right? And now with the with the reduction in pricing, the numbers start to slowly make sense. But again, it's important. It's important to make sure that you get the right help, talk to experts, and make sure when you're getting into the game for new investors, get your pro formas evaluated. And then after you go evaluated, get it evaluated again. Because the worst thing is in your first one, if you get burnt and you lose your savings, it'll set you back. So make sure you take the time. Pay, take people out to lunch, whatever it takes. But get them to give you the time to actually intelligibly review that pro forma for you.
And for listeners' benefit, Hussein and I are available if you are a member at Rattlesnake or... no, I'm kidding. I'm joking. I'm talking about the premium golf courses. I jest. I forgot where I was going. Oh, and to your point about protecting your savings, your investment capital, I cannot believe the things that people are putting money into. And you've seen some crazy pooled investment funds that people are putting their money into without, I'll say it. Actually, there was an article in the Globe and Mail just about 2-3 weeks ago about how all these investors are investing on stories rather than any sort of on the businesses or the leaders' ability to execute on their vision and pro formas.
So, and I say this very respectfully. I don't mean it insultingly at all, but I call it the lemming mentality. They're just following along because that's what everybody else is doing. They've heard, oh, well, my uncle did this, my aunt did this, and my friend did this, and whatever it is. And they just go and they keep going in and into these ventures. They don't understand the project. They don't understand the rate of return. They don't understand who is actually the person driving it. And they don't understand the fees that they're paying on the capital. Like I've seen some of these proposals from some of the bigger name players out there, and they have like acquisition fee, development fee, like they have a fee for literally everything. And I always say that if you have the capital, right, that these people need, because ultimately they need your money. Yes, they're aggregating it together with other people, but you providing them a need. Negotiate for yourself the best deal you possibly can. And also have a firm understanding. Your question always should be, how do I get my money back? Even if you don't get a return, right? But at least make sure you get your principal back. You and I have both seen stories where people have lost their principals. Forget their actual return that they were hoping to make. But they're not even getting back 100% of their principal. And in a real estate investment, with the way the market has been for the last 4 years, that's inexcusable.
Yeah, I was going to say the same thing. Inexcusable. How'd this happen?
Right? Like how, and that's because you didn't do the due diligence. You just trusted what other people are saying. Remember, nobody looks after your money the way you would look after your money. So take the time to ask the questions. And again, like this might seem like I'm trying to generate business for myself, but having a lawyer review like these agreements, what's it going to cost? Maybe anywhere from $350 to $750. But when you're investing 50,000, 100,000, 200,000, what is that value compared to what that peace of mind that someone who is experienced and seasoned is telling you this is worthwhile, this is worth doing, or no, don't do this? Because I can't tell you the number of times LPs, JVs, I've had to tell clients. Private mortgages. We have to actually review, and I show the clients because they're like, oh, well, look at this. Speaking to private mortgage, I'm getting 7%. Unbelievable. And I'm like, yeah, you're getting 7%, but you're paying 4% in fees. So what is your actual rate? It's 11%. And they're like, oh, I didn't know that. And I'm like, read it. Understand what you're actually paying. Always understand the bottom line. And then make a decision. If you're then okay with it, at least you've made that informed decision, right? So therefore, there's no surprises. You might still be okay with the return. Then that's fine. But know that this is what is actually costing you. This is what your money is worth, and this is what you get, and how much they're making on your money. Mm-hmm. Always understand that everyone has a right to make money. Everyone's in this to make money, but understand the ratio. How much are they making versus how much are you making on your money? Mm-hmm. Keep that in mind. It's still your money. Yes, they identified a project. Yes, they had an idea, but it's still your money.
Right. Nick, before we're recording, we're not going to name names. We were talking about a large syndicated mortgage that pulled a lot of money together, and they're paying fixed interest rates out to the investors. and what the developer was doing was they had to develop land, right? Had to bring it ready to shovel ready, and maybe even build some stuff on it. But they're like, and I find a lot of people do not have enough context. Like the saying is, it's all relative, right? And how I'll bring that to investment terms is every investment is relative to another. So, for example, in these syndicated mortgages, these pooled funds for developments, like it was paying like 8% a year, and then if everything went well, you get another 4% per year on the back end. But then for me, judging the risk of what the development was doing, that return, if everything went well, did not make sense to me.
And that's the other thing. Like, the rate of return has to be relative to the risk your money is assuming. Development has inherent risk. Is 8% sufficient for the amount of risk your money is taking? You know, and because what developers, like especially smaller ones, who don't have a track record. So that's the other thing. Always check track record. And relating to that, for the smaller ones, if something goes wrong, they're going to be delayed paying you out. Where are they going to get the money to keep paying you these returns? The risk of them going under is lower. So you have to think about, you know, what can you get upfront from them? Can you get a lending fee? Like, you know, is that available to you? Think about what options are available to you to structure it to make it in your favor.
And then I don't think enough people understand, like, my money's secured on, we're the second mortgage on the property.
What does a second mortgage mean?
There's that question to ask, and then the question I ask is, even if things go sideways, how long is it going to take to get your money back? Yeah. If you can get your money back.
And understand LTV. Understand how LTV is being calculated, and make sure you're not being fooled in the way the LTV is being calculated.
Right. And from my experience from these deals that have gone sideways, the appraisals were done based on finished value versus current appraised value, which then LTV was loan to value was completely inflated.
Exactly.
Right. So, but again, I don't think beginners know enough to be able to make this analysis, and that's why I like talking to you, because there's a bunch of lawyers who won't give opinions on an investment. Sometimes they don't have the context. Like, for example, if they're new grad, they won't have the context to say, I've seen lots of these deals go sideways, right? Versus you've seen lots of stuff go sideways.
Unfortunately, I wouldn't say lots. I've seen enough that I know, and not just from my legal capacity, but just from being informed and actually
being informed.
I care about, like, it's like a hobby, right? Everyone has a hobby. For me, finance, news, how markets work, how the economy is performing. It's like a nerdy interest for me, right? Because one, I'm actively involved in this space, not an interest in stuff, because I mean, that's for, as you know, for personal religious reasons, that's out of context, but from just in how to invest in ways that, you know, generate returns. Because ultimately, the way my ancestors left things better for future generations, that's what I do. I want to work hard and make things better for my kids and my grandkids, and you know, and leave something for them that's built in a way that's solid. And how do I do that? If I'm not informed, I don't want to wreck not just what I'm working hard for, but I'm privileged enough to have been left behind by people who had come before me. I have an obligation to safeguard and grow, and that only comes from being informed.
Now, the interesting about your story and journey is that you have the benefit of coming from a multiple generations of investors, entrepreneurs, business builders. On this show, I think we rarely have someone who's beyond a second generation investor. I was reading Psychology of Money, and the book explained how, like, for example, RSPs are not that old. Do you remember when RSPs or 401ks became a thing? 70s, 80s?
I would have to assume maybe 60s.
Right. So my point is that the concept of saving for retirement is not that old, really.
No.
Right. Let alone investing.
but the concept of retirement itself is quite new.
People died younger back then, so they didn't have to worry about these things.
But they still work. Like, I mean, think about it, right? Like, I mean, the old farmer types, like even now we see them, right? They're 80, 85, 90, and they're still going and tilling the fields, and, you know, they still care, right?
My point is, and I don't know, you tell me, I'm always thinking about the future. I'm like a little bit neurotic about these things. Like for example, I have a nanny, and my plan is to keep her until I need a nanny. Is my point, right? When I'm 80, I'm not tilling fields. But I've planned for these things, both like financially. I've planned for my investments. Plan, yeah. I don't find enough people are planning for. You said tomorrow, but really we mean 30, 50,
exactly.
5 generations down the road.
Yeah.
Are you are we anomalies?
I think
probably not amongst your clientele.
Even then, like I see it as a mix. I won't say we're anomalies. I think there are lots of people who are genuinely trying to create financial freedom, wealth freedom, however you want to call it, for multi-generationals, and they're working in their own way towards it. But I think there's a lot of, well, it's a social media age, and I don't want to sound like an old grandfather on this, back in my day.
Because you're young.
Yeah. But having seen that, I find there's a great desire for instant gratification.
Ew.
There's this great desire that I made X on this deal. That's it. I'm going on a vacation to Bali. I made X on this deal. I'm going to get myself my luxury sports car. And it's like, okay, you've got your vacation to wherever. You got your luxury sports car. You got your fancy watch. You got all these beautiful things you've gone and bought. What have you actually left in the bank that if tomorrow, God forbid, you got hit by a bus and you couldn't work anymore and you need care?
Yeah.
What do you have left? Can you afford it? What is your quality of life going to be if suddenly you cannot work and you cannot do anything? And people don't actually want to stop. They say it's morbid. They say, oh, it's negative thinking. Oh, you're manifesting failure. I'm like, it's not that. In my view, it's only by the grace of God or whatever you believe in, or if you don't believe in anything, whatever. But it's luck that you have health, that you have opportunity, that you're in Canada. Like, it's all, so much of our life is luck. And I'm like, we can't just apply luck to 100%. There's already so much luck in what we do and where we are, that you have a responsibility to wonder and ask yourself, what if that luck changes? What does my life look like? And I motivate myself by saying that even if my luck changes, my parents, my wife, my kids, my grandkids, they're going to be okay. And myself too. You have to look out for yourself. It can't always be about others too. You have to look out for yourself. Will I be okay? Will I be able to get whatever care I need if something happens to me? Will I be able to still have the quality of life to, pursue the interests that I want to pursue? And all of that costs money, and it's only getting more expensive. So if you're going and spending there's a time and a place. I'm not saying don't enjoy luxuries and don't have a good life at all. Go see the world. Go buy yourself whatever you want. But make sure you're still planning and being proportional in what you're doing. And I just find there's too much of, oh, well, the next deal I'll save. But that next deal I'll save never seems to come.
Yeah. So I've had to go for an exercise just to understand our clientele and business. I forget where I was going with this, what I was trying to do. But anyways, I was going down my client list, especially our clients who've been with us since for like over 10 years and whatnot. And funny observation I made was how much our clientele is just like in the book, The Millionaire Next Door. Our clients are frugal people. They don't dress with flash. They don't drive cars almost none of our cars have premium vehicles, as in like, Acura, Lexus, Cadillac, right? Almost none of them do. And even if they do, they probably bought it used. And again, looking at them, you never know they're real estate millionaires. But again, yeah, a lot of them are very frugal. And the reason I share this is because for those with financial success, like those with a lot of like the people who aren't so posting on social media, how much flash and dash they have, like that's who my rich clientele are. Like they share almost nothing on social media about how successful they are financially. I think it's interesting.
Why do you need to?
You don't need to. But
I always ask myself when I see it, I'm like,
right.
What is this person trying to show me? Right? And I'm not going to form judgment and pass it, but I always ask myself that question. Regardless, when people post on social media, I see the physical of the obvious of what they're trying to show, but I always ask myself and within myself, what are you actually trying to show me? Right? And each to their own. Everyone has to live their life and how they want to do it. But personally, I find it very curious.
I'm often, for example, I have lots of clients who won't come on the show because they're that private, and like, oh, I'm not special, blah blah blah. Like, I'm like, look around yourself and tell me who's richer in your circle, right? For example, I have a client who's a retired teacher, and like, do you know any teachers that have a higher net worth than yourself? And they don't want to share, right? And my point to them is, you're not going to inspire anyone if you don't share. So that's my point. Because my understanding, my observation of a lot of human behavior is people won't do things unless they think it's low risk and they think they can do it. So literally, actually, now that I remember this the same client I'm talking about, the retired teacher, another client of mine, I was telling him about her successes, and he's like, I know her. How come I'm not that successful? I need to try harder. And he did. Right? So he was inspired by the actions of another person. Right? The whole term of social proof. When you drive the ball 260 yards, I'm like, okay, I maybe can do that too. Right? It's humanly possible for Hussein. Maybe it's humanly possible for myself. You know what I mean?
Yeah, for sure.
Right?
It's always possible if we apply. People often...
But not everyone knows what's possible.
They put limitations. They put handbrakes on their own ambition. And I just find that some very skilled, very talented people, if they just had some discipline, right? Like, it's what we talked about offline, where I don't recall again who said it, but there was some very successful U.S. investor who said that if you put $500 a month into an index fund, but how many people do? Like, I guarantee you that in our generation, the next generation, if you told someone, you put $500 away a month and you'll be a multi-millionaire in 20 years, how many of them do you think would have the discipline to do that? I would venture the percentage would be quite small, because they won't be willing to sacrifice that $500 a month right now, because it might mean a night out less, a meal out less, not the newest sunglasses. That's more important. Even if you could guarantee them that in 20 years you'd be a millionaire if you did that.
I might just force it on my kids. Give me your login. I'm automating this for you.
I know a lot of successful immigrant parents who literally, when their kids have started working, very successful, great kids, but they literally require their kids to give them $500 a month. Some frame it as paying back for their education or something. Yeah. But what the parents are doing is they're doing exactly that, investing $500 in an index fund for them. The number's different, whatever it might be, but I know a lot of immigrant parents especially who do that for their kids as they're starting out professionally to keep them disciplined. Plus there's also like some family planning and all that, like family law benefits and all that to that kind of structure as well. So it's like you can kill many birds with thinking like that.
So what about diversification?
but this is only a small amount of the portfolio. It's not diverse.
So you and I have been talking about gold offline. Yeah, we're talking about other things. We talk about a lot. Yeah, we have some pretty cool conversations. We were talking about that gold discovery, for example, in Uganda, which is hopefully positive news for all those involved. I understand a Chinese company that invested $200 million to help find that gold. But I'm sure everything's going to work out well and the poor people will get their own gold and everything like that. Anyways, but the headline was 31 million tons gold ore discovered in Uganda, right? And then you and I got chatting about it, digging, and then which made me dig deeper because it was hard to find how much would actually be able to process. And I think the number was 31,000 tons, I think. So about 1%. Yeah. About 1% of the ore discovery will be able to be converted into actual gold. And why this is interesting to me is because as someone who just likes to geek out about economics and hard assets, I went looking for that news item because Michael Saylor mentioned it. Michael Saylor being the CEO of, I'm not sure if he's the founder, CEO of MicroStrategy. So one of the biggest Bitcoin celebrities out there. He quoted that finding because based on Google, I don't know if it's accurate, but the first result from Google when I Googled how much gold is there in the world is about 20, I don't know what the date, but 27 million tons of processed gold existence in the world. So then 31 million tons would sound like we're basically doubling the supply. And that's what he said, right?
Yeah.
This new discovery basically doubles the gold supply. So folks, don't please quote me on this. Go ahead and look it up yourself. So that's why I was digging into it. Mm-hmm. But in fact, it's not it's a 1% change.
Yeah, and that's the thing, right? It's always, and this is the thing, like it's similar to what I mentioned earlier in this conversation about the social media and people posting, and you take the obvious as what they're saying, and then you ask yourself, what are they actually saying?
Yeah.
Right? It's the same thing. Everyone has a narrative that they're trying to push.
Yeah.
And if you just go with the narrative they want you to take, sometimes that could be fine. That could be great and awesome. But it could also mean that you're missing the point of what's in your interest. Because you're basically just accepting someone else's narrative and then adopting it into your life, and then you percolate it down. Mm-hmm. And sometimes this can be very, very damaging, right?
Yeah.
It's like,
because my understanding of gold would be incorrect if my understanding was the same as Michael Saylor's.
Yeah.
Versus a 1% is not the end of the world. No, it's not going to change the hardness or overall value of gold.
No. And this other fundamental thing about gold is people just keep thinking about gold as just like this jewelry item, right? Like this luxury item. But gold has so much functional use in industry that people just, and that's where when people say like, oh, why are you so bullish on gold and why do you like gold so much? It's because it has functional use. And especially as we go towards electric vehicles and all these other things, in my opinion, again, do your own research, gold is going to play a factor in that too.
You think it's going to be needed for the production?
It's a fantastic conductor. One of the very best. It existed. Like back in the day, McLaren used to use gold in their vehicles.
Oh, gee. Like the F1? Like
no, like their road supercars. But
yeah, I guess it's dropping. Wait, how much gold?
Not a lot, but
okay.
But because of this conductivity,
yeah.
right? At those temperatures, at those speeds, at those heat, and eventually they're going to need to do that, and especially when you think about it, right? Like we compare, like right now we use cobalt for batteries and things like that. Those are at this time are more unstable sources, more volatile countries. Gold is going to have more opportunity, and not just that, in aerospace, gold is used so much in planes and things like that. In defense systems, gold is used. Like, and then obviously its appeal in jewelry and all that has been there forever.
Right.
And again, the thing I ask is, and again, someone can much smarter than me who's listening here or will correct me, but from my understanding, there's almost nothing you can point to that has been a symbol of value and status since as far back as history records. Like it was value. Like what else? Like, I mean, animal skins? Like, no, it doesn't have value today, right?
No, that's not good for woke culture.
But that's what I'm saying, right? Like gold has retained value despite the world changing immeasurably dozens of times over.
Yeah, hundreds of years.
Right? Like different systems, different countries, different cultures, different everything. And gold has always retained value.
Okay.
If you own gold, you were successful and rich no matter what time you lived in.
Right. So you said the word you said was retain. That's all I ever heard.
Yeah.
So your gold investment, it's probably not the right word, investment, is you're trying to store wealth.
Of course.
Right. And so that's your primary objective for gold.
Exactly.
Okay. And another conversation we had,
and it's fantastically efficient at transitioning wealth to the next generation.
It is heavy though if you have a lot of it.
But how do you show ownership? It's much easier to slide it down.
Hopefully no accountants are listening. In another conversation, we mentioned how it can be used as collateral. I've never actually, I don't have any personal experience or know many people with experiences using it as collateral for for like, can you give me an
you can borrow against gold, right? On a small scale, like bigger institutions do it, but think of it on a small scale, right? When people have, like, how does a pawn shop work? You give them gold, they'll give you cash.
Yeah.
You give them, you pay them back the cash, you take your gold back, right? They're bigger institutions, same thing. You deposit gold at certain financial institutions, they'll be willing to lend against it.
What would the minimum be in?
That's something we can discuss offline.
Oh yeah, it's significant, huh?
I didn't say that. But
Okay.
that's an offline discussion.
No wonder I haven't heard of these things. It's funny because like when you talk to people who have experience with wealth, you learn all these other opportunities. Like for example, I never knew what whole life insurance was before because that wasn't the crowds I was rolling with, right? And partly real estate.
It's one of the best tools, assuming it fits your other values and everything. But from an estate planning tool, it's absolutely one of the best tools for passing wealth down. And in fact, like whole life insurance is how the Rockefellers, the Kennedys, and others actually transition their wealth.
No one talked about it though. Well, at least not in my circles.
Yeah, I
We were
mean,
too worried about the Leafs, how they're playing and not playing. They're playing golf really great right now, I'm sure. We talked about other, before we started recording, we talked about other investments you do outside of real estate. And you've been, yourself and your family are looking for trends. Any trends you want to share right now?
it's not about like.
Should we be storing guns because the Trudeau government's going to take them away?
Well, let's stay away from politics. It's not about so much trends. It's just that about how do you analyze an investment, right? And I say that you can either do what everybody else is doing for the last 12 months and say, okay, well, I'm going to do that.
Yeah, because a lot of those things aren't working right now.
Or you can think, how do I move this to what do people need? Where are people going to need? What do people need to live?
Yeah.
And where are they going to want to go 20 years from now? How are they going to want to go there? Identify, basically be the creator of trends, especially if you have, and again, I'm not saying this is put 100% of your investment into it. Be strategic, have your conservative investments, but also don't put everything into what everyone else is doing. Put some, allocate, my personal belief is 15% to taking a little bit more risk, informed risk, as has been a theme throughout this conversation. But think about what people are going to need. What's going to matter in this world, in your opinion, and do your research 20 years from now. Because if you can put your money in 20 years from now, think about how much it's going to be. Because for example, the example I give is, what was Mississauga 20 years from now? It was already started to build up, but how much of it was farmland and things like that? But if people saw that, Canada's got a population problem, they're going to have people coming in. Toronto only has so much. This is the corridor to Niagara Falls. This is a logical place where things should develop. If you had the vision and started buying land in Mississauga, right, instead of just keeping on buying in the city of Toronto, right? If you were an investor and you had some money and you decided to move your money to Mississauga, today, where would you be, right?
Well, you'd be loaded.
Exactly. Where's the opportunity, right? And again, there's still that same opportunity. You need to think about, where will people live?
Right.
Where will people move? Are you willing to, and also are you willing to take the risk, right? Because, I mean, there's this whole concept of, is the urban boundary going to move, yes or no? Everyone can have their own school of thought.
Doug Ford one, I'm going to guess is moving.
But imagine before he won, right? Like, if you, in late 2021, early 2022, if you started buying up land along projected areas of where the expected urban boundary may move, right? Now, it was a risk. What if he didn't win? What if he doesn't follow through? What if where you thought it was going to move, it doesn't move there and it moves down the road? You might get burned. And with anything, there's risk. But if it does move, you suddenly turn up, I can't even, I'm not going to speculate on here. I have an idea of what multiple that means your property value changed. Right?
So you're talking about large pieces of land, or are you?
It doesn't have to be. It doesn't have to be. You can.
Or are you open to a single family home on King Street where the LRT might go through?
Why not? Like it's all, everyone has to play to their scale, right? And there's opportunity for small players, opportunity for medium-sized players, opportunity for big players. opportunity exists. It's all about your risk tolerance and what you're willing to do with it, right? And identify opportunity. Investing doesn't have to be sexy. To me, sexy is making money.
Oh yeah,
right?
Nothing sexier.
You know, it's not about the flash. It's not about showing a lifestyle or showing your asset off, you know? Like, if that was the case, everyone would just have beachfront property in Miami and everything else wouldn't be done. You know what I mean? So it's about what are the returns? How does your bank balance look, right? And again, like, keep working till your bank balance looks like a phone number, and I don't mean 911. So
411.
Yeah.
111? I forget what the number. I forget what the city number is if you need the city. What are you looking at these days? Can you?
Honestly, I like resources. I like commodities a lot. I like resources.
Any particular commodities? Because like oil is pretty high and gas is pretty high and coming down.
I mean, wheat is interesting with export controls going on. I think copper is an interesting space to be in. I think nickel, cobalt, lithium, these are markets that are, again, quite interesting to invest in.
So are you buying futures, or are you buying real estate in those areas where they're being mined?
It's a combination. It's a combination of actually identifying opportunity, right? And then the other thing is anything waterfront. I'm interested in anything because water is going to be, in my opinion, one of the most sought after commodities. Clean drinking water is in short supply. And it's going to be needed, and especially in Canada, if you could get a property with riparian rights, you can use the water. There's a lot of opportunity there, and they're not making more of it. Like they may make, now people say man-made lakes and development. I'm not talking about that.
What? I got one. It's gonna make me a lot of money. I'm gonna drink it.
Yeah.
God, that's a terrible idea. Cottages? That include cottages?
If it's got riparian rights.
Right.
But even without it, right? Waterfront properties are limited, right? Now they're gonna have dip, they're gonna flow. Again, if you're looking for something in quick returns, don't ask me for real estate buys because I don't look at my real estate for quick returns.
Yeah.
I look at my real estate a minimum 10-year horizon, because honestly, I'm busy. I don't have time to be keeping up year to year. If I have a 10-year horizon, I commit to the plan. I have conviction, and then I see it through. I can't tell you the amount of times I see people, oh my God, I got this 10-year plan, but oh my God, the market's dipped 2 months into it. Gotta sell. I'm like, what was your 10-year plan? You clearly had no conviction in your plan.
Yeah.
You have to believe in it. Like when people react, it's the same with anything, right? Like if people are reacting to the market and not their plan, I'm like, your plan was worthless. So
you had
plan
no plan.
better. That's it. And again, I don't mean any of this out of arrogance or, I'm better than anyone. I've made mistakes, like, as I'm sure a lot of others have.
I've made plenty.
But ultimately...
And I live in a lot of fear.
Ultimately, why I like to come on here is, if you don't share your experiences, how are people going to learn and avoid the mistakes you made? I feel like one of the decent things you can do as a human being is be willing to share that I'm not perfect. I've screwed up lots and lots of times. But I'm still here, I'm still standing, and I'm still striving to be better. And if someone as flawed as myself can do it, so can you.
We talked about cottages briefly. Are you seeing anything in the cottage market coming across your desk?
No,
appraisals coming in?
It's been very quiet.
Oh, no one's even buying them.
For me anyway, and I'm sure other lawyers may have more, but I've just not been seeing. I've seen maybe 3 cottage deals this month, which is lower than average for me. And 2 are sales that were forced by family dynamic more than anything else.
Right, like an estate sale or divorce.
Well, I think
not a vanilla
siblings
transaction.
not getting along, and the decision was to sell the generational asset.
Got it.
And then one was just someone deciding that had a decent year in their business and they wanted a cottage for their family. And so they decided to buy one. And they took a good opportunity, got a good deal, negotiated themselves a private deal, which is quite impressive. Like, I really respected that hustle, going in, knocking door to door for cottages they like, saying, hey, you're interested in selling, and finally getting a deal.
What month was this?
In May.
Oh, they must have been really keen on a particular location.
They wanted to be in the Quarters. Like, they 100% wanted to be on Stony Lake, and that's what they wanted.
Cool. Yeah, because I've just heard anecdotal stories about some softness in the cottage market, But again, anecdotal, very limited data points.
Yeah, I mean, I'm sure there will be, but ultimately, waterfront property, it's solid. And in fact, if there's opportunity, I would say do your due diligence, make sure it is a true opportunity. I'd encourage you to execute right now.
Mm-hmm. And then people can bring you opportunities to review.
For sure.
At what stage can they bring you an opportunity to review?
At any stage, right? And honestly, depending on the relationship I have or where you're coming through, it's quite inexpensive. Like, you'd be surprised that it's actually very reasonable to actually just, get on the phone with me for 10, 15, 20 minutes
Mm-hmm.
and just say, hey, these are my thoughts. You can take it or leave it, but it's just, you now have another data point to add to your calculation, your analysis.
Right. So
what's the downside?
So if there's a TikTok influencer touting a new REIT that they just formed, and I want to bounce it off you, I can do that?
Absolutely.
All right. But they dance really well. I'm sure they can build condos like no tomorrow.
I
make that up. I'm joking.
I always joke, right? Like, I always feel like I should have a better social media presence, and then I think about two things. One, who the heck's gonna want to see my ugly face on anything? And the other thing I think about is I can't move to save my life, so I'm like, I ain't got moves. I'm not funny, and I'm ugly. Social media ain't for me.
Yeah, or you could go the other approach and just show your fancy cars or something.
Yeah, that's not me though.
Hussein, I want to thank you for doing this. Any final thoughts you want to share? I know you spend a lot of time philosophizing. Did I say that right?
Honestly, it's very simple. It's be true to yourself, have a vision, trust your plan, and ask questions from everybody you meet. You never know where they might be,
Mm-hmm.
but ask questions, because you might be shocked at the answers you receive and how much knowledge you can gain. Always be asking questions.
Asking questions. How are banks these days on lending? On executing on lending?
I'm not a mortgage broker, but
Just your experience.
They're very slow, so make sure you give yourself enough time to close, to get instructions. Be thoughtful and get advice from the experts on whether you need to do fixed or variable in this evolving, rapidly changing market. And ask what programs have available. Don't go with what the first thing they're trying to pitch you. See what's available, and unless you're very happy or you have an established relationship, shop it around. Go see who's hungry for your business. That's the it sounds a bit mercenary, but it is the beauty of a volatile market, is people are hungry for your business, because it's not as easy. Because at one point it was so easy that they were not motivated to fight for your business, to struggle for your business. But as the market is evolving and changing, the balance of power is shifting to the consumer now versus the institutional side. So you can push, you can say like, hey, what can you do for me?
Mm-hmm. Mm-hmm.
Right? Because remember, these guys still have to lend out X amount of dollars. They still have their numbers, their quotas that they need to hit.
And you expect service levels to stay at these levels? Because before we were recording, who was it? Wealthsimple's laid off 13%. Who was it in the States? Was it Morgan Stanley? Which major bank just laid off?
JP Morgan.
JP Morgan. Was it 600 or 1,000?
I believe it
mortgage
was 1,000.
people? And you think that we might see some of this in Canada as well?
That's from, like, I'm very active on Twitter to get news, and I find it to be quite a reliable source.
Twitter killed me on the provincial election. I thought Ford was going down for sure.
Oh, you're following the wrong people.
I'm following the wrong people.
Yeah.
No, I think that's part of. Who's on Twitter. A certain political leaning is on Twitter and not on Twitter. Whatever. It doesn't matter.
But anyway,
But my point is that
there is an expectation that there's going to be some kind of. It almost seems like there's very few people who don't believe we're going to go into recession. Some people say we're already there. Some people say it'll be a technical recession, whatever the case may be.
Yeah.
And generally, layoffs and recessions go hand in hand. I hope not, because I don't want anyone to suffer. We've already come out of 2 years of a lot of turmoil and uncertainty.
Yeah, it sucks.
Where a lot of families have struggled one way or another. I don't wish that for anyone, but if you're asking me my honest expectation, I think there will be a short recession that will follow layoffs. And going to your question, will service levels improve? Honestly, I'm not optimistic, because ultimately, in my view, financial institutions don't care about customer service. They care about shareholder service. And if they're not paying wages, that means more on their bottom line. I hope I'm wrong, but my own personal experience with banking and stuff, I do have a very good small business advisor right now who I'm happy with. It's no reflection on her. But having said that, the overall, like at the branch level, the service you get is horrific.
Yeah.
And a lot of it is just that the training, they're good people. Like some of this new staff, they're young, but if you get no training, how are you going to know how to do your job, right? And because there's such a high turnover, banks are not investing in training in any meaningful way. Again, my opinion, my experience. If you've had different, don't yell at me. I'm just honestly sharing my opinion.
Well, you've seen what I'm going through with my refi.
Yeah, I mean, it's been a joke, quite frankly.
Yeah, I think we're on our fourth revision.
Yes.
Yeah. So for the listeners' context, like we were ready to like everything was supposed to be done. We've had to send it back for like I think we've sent it back 4 times, as in there's mistakes in the file, like very, very bad mistakes, and most of them are in my favor, so they won't even go through anyways. So it makes no sense to allow these mistakes to go through. But yeah, four revisions. There's and
we're almost there.
We're almost there. And then the feedback that we're getting is also that they're short-staffed behind, like back in the back office. So to hear that there's gonna be layoffs when they're already short-staffed, oh man, things are probably gonna get worse for service, because the people that are trying to work, they're overwhelmed.
Honestly, like sometimes, like you get the exception where they get instructions to us pretty quick, but for the most part, like especially if you're going to a B lender, give yourself time. Really give yourself time.
Yeah.
Because you don't want to be stuck where, especially with people needing to use those funds to sell, buy, whatever is going on, you don't want to end up in that. Like it's painful. It's very stressful if you cannot close because your mortgage funds didn't come through or whatever, right?
Can you share the ratio of B lenders that aren't closing on time?
There's a specific B lender, I won't name them, but from my own experience, and I'm not talking about like 1 or 2 deals, I'm talking about having done about 15 to 20 deals with them in the last few months, plus talking about the fact that having spoken to other counsel about this specific B lender, 70% of their deals are not closing on the day of closing.
Oh my God, that's high. That's gone up a lot since we last talked.
It's one specific one.
All right.
That just is very problematic.
Is it an appetite for lending, or is it
honestly
short-staffed?
I think their systems and their processes in this space, like they're very good in commercial space. They're brilliant. So that's why it's odd that they suck, and there's no other word for it, in the residential space. They're terrible and have been for a long time, and it's just gotten worse.
Right. Because the demand is only getting greater for B lending in this environment.
They don't review the file. You can send the file 3-4 days before. They don't review it till the afternoon of the closing.
Yeah. They must be slammed then.
And they don't pay attention. And half of it is they ask you for documents you've already submitted, and then they just go radio silent. So maybe, again, it could just be a staffing issue. It could be whatever, right? But to me, it's unacceptable. If a client has done everything in their possible power, there's been no mistakes anywhere along the chain, and you cannot fund on time for a simple residential deal, there's nothing complicated to it, nothing unusual. Some of it is owner-occupied principal residence. What's the issue? Why can you not close? To me, it's ridiculous.
And can you comment on the level of risk you're seeing in terms of private mortgages these days?
Honestly, I'm seeing a lot less. Less
deals?
I'm seeing a lot less deals, but it's still there. It's still going. And I know some private lenders are just not lending. Like I know clients who used to use private lender X or private lender Y, and they're just saying like until the fall, we're just not issuing any new deals. So I've seen that.
Oh, so that avenue of capital is dried up.
That avenue of capital is dried up for certain clients, so they've had to go to other private lenders. And I'm seeing the private lenders are now trying to get more upfront fees. And I'm seeing the LTV go down. Like before, it wasn't uncommon. You could push up to 85. Now I'm seeing 70, 75 is more the sweet spot.
And then how many are these, at the end of these terms, at the end of private mortgages, how many are you seeing are being discharged cleanly?
Well, I mean, a lot of these are new, right? So it's hard to tell. Like, speak to me in a year, invite me back, and we can reevaluate this question. But for the most part, like, my clients that have had to borrow private money have been able to pay back, and it's been clean and it's been good.
Just as someone who's paranoid in the last 5 years, and like, this is the market I want to lend in. I don't know when this is going to end. And now finally I'm right. Finally the gravy train's ended. And now this is the market I would not want to have funds lended out in.
Yeah.
All right. Hussein, thanks so much for doing this. Appreciate that you want to hang it with me when you can hang it with much cooler people, much more successful people, funnier people than I.
Not at all. It's a pleasure always to be with you, Erwin. Thanks for having me on the show. And I'm sure we'll get out on the golf course sooner rather than later, hopefully.
Let's go now. I think Cherry wants you. Thanks, Hussein.
No worries.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. The link is also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.